What is up? Oh, I was like, why do I have this double audio going through? What's up, everybody? Happy Monday. We are here. We are live. It is the lunch hour, and the markets are not liking what we're seeing over the weekend. I got my good buddy here in the house. Emp, I'm bringing you up. Ready, set. Let's see, where is he at? He's crying.
Close the markets.
Close the markets. Close them.
I've been short all morning, actually. It's been a great morning. What's up, Pedro? How's everybody doing?
Dude, how's your Easter, man?
It was good. I caught up on a little bit of sleep, caught up on a lot of work. It was a good weekend. And the kids are absolutely screaming in here because they're still on break.
Yeah, Emp was sending me a bunch of videos of the kiddos last weekend. So I hope everybody had a good weekend. But yeah, the markets, I feel like they're still on break. I don't know what it was. This was like one of those weekends. It felt like the longest weekend ever, but also the shortest weekend at the same time. I don't know if it's a dad thing where like there's so much going on that like, and then by the end of it, you're just absolutely exhausted and you're like, dude, I actually need a break still, but you did so much. But yeah, man, what a crazy one. Analyzer in the house. Look at you guys. Midwest in the house. Look at Super Slanky Crust. Look at you guys. Patel. Oh, man. Top Dasher Brandon, what's up? Casey, what's up? Midiolito. What is up? Patrick, of course, in the house. Appreciate you guys. Jill, look at this. Roll call, everybody. Stealth JCP, JCB. Man. All right. Well, let's get into it. So, this is, I'm trying to do the slides and I'm looking at everything. I'm like, dude, I want to find like good things to say, but all I got is that it's Easter. Happy Easter. But in the meantime, it is kind of a wild whipsaw. I saw a bunch of headlines. We've been talking about this as, let's say, COVID level volatility. And I am actually seeing the headlines now. Okay, well, this is COVID level uncertainty. And, if you were around during COVID, I'd say, it seems like we're a lot lower than we were. I mean, we are a lot lower than we've been. But personally, I'm just not sure. I'm taking a pause for a minute. Like there's one or two things on my shopping list. I think you get your shopping list out. But you got to wait and let these things come to you because it could get a lot crazier than you might think. Maybe don't open the long-term ports for a while. But that's at the same time, it's been like, okay, one tweet legitimately can turn this whole thing around, which is wild, right? But at this point, I'm like, okay, even if we get the tweets, which we've gotten a handful of them, they're not, what's the word? They're not really doing a whole lot of favors. And I don't know that the market's really believing everything that they're seeing anyways, right? There's a lot of stuff on CNBC this morning. What was it? Jeremy Siegel comes on to CNBC and actually legit calls for cuts. I'm like, huh. And on my recap here, and this is basically what's going on. So Trump curbs chip exports to China. Like what, dude? All right. I don't know. Trump's so wild, dude. He could be like, I don't think anybody would deserve our chips outside the US. And I'm like, oh God, what's that going to do to NVIDIA? Who knows? And then Huawei, by the way, picking up the slack on their end. So I think that's like, is there real competition? We've been so, what's the word I'm looking for? Like set on this way of like, there's nobody like NVIDIA, but can there be? I mean, if there was going to be somebody else, it would be Huawei. I don't see. What is that? I don't know what that is. Oh, he's glitching.
I have a Huawei watch right here.
Oh, Huawei watch. Yeah. I had a buddy that works for Huawei.
Huawei makes some incredible stuff, by the way.
I have a buddy that works for Huawei. He's like super high up exec. I haven't talked to him forever though. He's like way down south now. We got Meta hitting there with their monopoly lawsuits, they're antitrust lawsuits. The last time Meta went through a battle like this in the court system actually did take them down quite a bit from a stock perspective. Oil rebounded about $62 a barrel on hopes of renewed U.S.-China trade talks, but you never know. I don't know why I have this headline. As steel rebar in China declines to 7-month low. That's the steel tariffs, I guess. And dollar's the big thing. Dollar at 3-year low on concerns about economic fallout from tariffs. And I'm watching, a couple other places that like you think that you would think that people would kind of like flock to bonds, right? We're not seeing that. And that's kind of, if you only have 2 playbooks for the stock market, as in like, okay, stocks go up, use stocks or bonds, like your barbell approach. There are really like 4 playbooks for the stock market, and what's playing out is definitively stagflation, and the only trade in that environment is gold, and that's why we're seeing gold here at all-time highs. It's not yields. Yields doesn't, or bonds. Bonds don't like go wild, but they try, they fail, they try, they fail. And that's kind of what we're seeing right now. So the yields in general are not being seen, let's say, as a place for like safe haven assets, if that makes sense. If we were seeing a lot of flows into bonds, then we would be seeing rates coming down on their own, regardless of what the Fed's doing, and we'd be seeing like the price of the bonds themselves, like TLT, et cetera, going up. And we're just not seeing that yet. So I think it's a little preemptive to say that, hey, people are calling for cuts. He basically came out last week, Powell, and this is what he said. So Powell's mention last week was like, hey, look, it was almost laughable. Whenever he comes out, by the way, it's so laughable to them that like they're cracking jokes here and there. And I'm like, dude. But I would say that his mentality is almost like, look, even if this inflation gets out of hand, let's say from a tariff perspective, I don't think he's thinking that it's his fault, so he's not going to be to blame. So I don't think he's really that worried about that right now. So the people thinking that they're going to cut rates, you're anticipating, right? So I guess that's the difference. But the money is not flowing into that market yet. So if you're going to follow the money's still going to gold for sure. Benny, is it like, imagine your gold and MSTR short isn't going. I'm not short gold right now. I am short MSTR. My gold short was quick, short-lived. I'm long GDX, long SLV. And I own a lot of gold, at least bullion, but that is what it is. But Powell, there isn't a modern experience of how to think about this. So there's been similar things, but not a modern day tariff like war like this. And his note was like, hey, we the Fed may find ourselves in a challenging scenario in which our dual mandate goals are intention. And if you're not sure what that means, the dual mandate for the Fed is like, okay, promote full employment, number one, and to promote stable prices, right? Keep inflation low. So those are the 2 things that the Fed is in charge of. They have one tool to do that. And I think really the question is like, all right, and this is where Powell is. If these tariffs increase costs to the corporations, let's say enterprise or whoever, like S&P 500 type corporations, do they just eat that, or how do they manage their own internal costs? Because at the end of the day, they're all businesses and they still need to turn a profit. How do they do that while absorbing that potential increased cost of goods? Do they lay people off, or do they increase prices to the end user? And so those are basically their 2 options, aside from like, yeah, we're going to be super efficient. We're going to try and drive efficiency as corporations, but how do they do that? And what does that mean for the economy? Does that mean layoffs? We're not seeing that in the employment surveys just yet. But if we do, it's going to get a little wild. And we're coming into earnings week, earnings season pretty soon here. Well, actually, we're basically in it now, not at the mega cap level, but we'll have mega cap. When is mega cap week? 2 weeks from now, maybe?
Next week-ish.
Is it next week? Next week-ish.
Well, we have 2 Mag 7s this week.
We have
Tesla, Google.
Tesla. Do we have Google this week?
Thursday.
Oh, there you go. So, the market's going to be listening for the market's going to be listening to hear if, let's say, Microsoft, Google, Amazon, Meta, etc., decrease.
That's next week, by the way. April 30th, Microsoft, Meta, May
There you
1st,
go.
Apple, Amazon.
Yeah.
To be confirmed.
So they're going to be listening. The market's going to be listening to these mega cap companies to hear if they're going to change some of those forecasts that they've been putting out in terms of their AI spend, right? And if this is Mag 7 year of efficiency, they might. And I'm just looking across the board and, like, not to be Debbie Downer, but if they do, let's say, change those forecasts of spend, what does that do to the semis as a sector, right? We're not Micron. If you haven't seen this chart of Micron, there's no AI into that chart right now. It's crazy. What does that do to NVIDIA, AMD, whoever? And then the other thing was like, well, if they don't change their forecasts, is it a positive catalyst? I'm really not sure that it is either, because it's already out there. It's kind of like priced in. So I'm not in a rush, if that makes sense, to jump in anything long term here, like, at all. I'll wait a bit longer. And Amazon coming in 165. I mean, that's low to me, but could we see sub 150s? It's possible, but that would be a shopping list item, and that would be a shopping list price, right? Sub 150s, something like that. I would probably be nibbling, and I'd be nibbling right now because I just don't know how low it can go. We'll have to see. But if your time horizon's long enough, I think you're fine regardless. But this is for, like, shorter term kind of perspective. And yeah, Walter, so we do have Tesla tomorrow. I don't think so. Like, Tesla is one that's spending a ton on AI. I'm pretty positive we're not going to hear any change on Tesla's forecast, and they're a big contributor to NVIDIA's revenue, as I believe. But that's one, like, look, I don't think they're going to be really changing anything crazy. So I'm just going to move forward really quick. We're going to take a look at this, like, presidential seasonality chart one more time. We're here. I think if we're below 500 on SPY, I don't know. We could get bounces. I think we could get bounces towards the end of the week, possibly. But I'm having a hard time seeing this kind of move if the seasonality itself is going to be like, accurate this year. So I don't know. 500's been about the 502 on SPY is about the low so far on the month. We're really close. We're like 10 points away. My gut actually tells me, though, to be completely honest, is like, we've had, do you ever measure, like, quarterly moves, like an average quarterly move? Quarterly. An average quarterly move on SPY or Qs at the index level, we've experienced quarterly moves within a few days. And I always say this: the markets are either running or resting. Believe it or not, we're in a rest period now. We've had a massive move. So best case scenario to me is, like, we go sideways for the rest of the quarter. Like, this is Q2. If all of Q2 is completely sideways, I'm actually probably, I'm happier, right? And I think that that might be in the cards after this type of a move, to spend a month or two digesting this level of uncertainty, I think is probably normal. So again, wouldn't be in a rush. Maybe we see, the market's not going to run away from me for sure. It's not like a tweet's going to come out and all is good. Meaning, like, even if a tweet comes out, all is good. There's too much technical damage to think that we're going to run to the all-time highs. But, again, I think if your time horizon is long enough, a little bit of capital allocation may be fine. We'll take a look at some stocks towards the end of the show today. I have a couple on my watch list. Meta is getting pretty interesting, so we'll take a look at that today. And if you do want to take a look at anything else by the end of the show, go ahead and drop some tickers. But really quick, I'm going to do a quick highlight, and then Amp, if you want to jump in after I go through earnings really quick. But so today we really don't have a lot of news this week, which is, I think, a good thing. There's one other piece. We're in a blackout period right now for buybacks, I guess. One of the guys we're talking about in the server. So I believe it's Friday. So what that means is that a lot of companies cannot buy stocks right now. Like, they cannot buy their own stocks. And when they can, a lot of times that ends up being like a floor. We may hear, this would be the one saving grace for earnings season, is if we hear some like record breaking buybacks from some of the Mag 7, that might be a catalyst that's not necessarily priced into the market here. That could possibly give us a little bit of pop. So I'm going to start listening for that as well. But I believe that blackout period ends on Friday, which means that if we do start to get some of those buybacks coming through, or at least announcements of, it might show up on Thursday. So Friday, and again, even if this is a bear market, but Fridays in a bear market tend to be pretty green, oddly, just because you end up selling off most of the weeks, and people cover their shorts towards the end of the week because they don't want to go home with a crazy position on over the weekend. So that's possible that we might get a little bounce towards the end of the week. But again, listening for those kind of buybacks might be a hidden little gem that we could see during this next coming earnings season. 2-year note auction tomorrow. So this is big. So 2-year, 10-year, you heard about the spread, like the yield curve. And auctions coming out a lot this week. I think they should have been on your radar not too long ago, and they kind of fell off. But with the tariff stuff going on, the concern would be that, we're tariffing the crap out of China. I don't know what's going on with Japan. Hopefully we get a deal, but we're pissing off a lot of countries, and a lot of these countries are huge consumers of our debt. Like, they're buying our bonds, and I don't think they're going to go sell our bonds. But if they don't show up to the auctions, which are like all the time, if they don't show up to the auctions, what happens is that there's just not enough buyers to keep the yields down. And that's why we're starting to see some of these. That's why we might see some yields go up during the auctions, and the price of the bonds themselves, which are inversely related, go down if we don't have enough appetite in the market, right? So it's going to be a crazy one. Then Wednesday we get S&P PMI, global PMI flashes. We are Wednesday could be a pretty big market mover. So we'll see. Beige book also comes out. That's the book where all the Fed presidents kind of like turn in their reports for the next FOMC meeting. That gets read by a lot of the analysts. It's not a big market moving event usually, but it's kind of like the precursor to what's going to happen during the FOMC. And then durable goods, home sales Thursday, and Friday consumer sentiment. What's funny is today we got this CB. So this is not called the misleading index. It's a CB leading index, Chicago Board leading index, but people call it, some of us
you say the misleading.
Yeah, we call it the misleading indexes. This thing has been calling, by the way, for a correction for like 3 years, right? It's been so off forever that it's been dubbed the misleading index. Now it seems to be working, but we'll see. So that's what we have to look forward to this week on the calendar. Tariffs are going to stay again on high alert. Some of the bigger companies, I saw GE, core GE tomorrow morning. That's GE, not GEV, not GE Vernova, not GE Healthcare, core GE. And Tesla tomorrow after the close. Boeing before the open Wednesday. Oh man, this is kind of gonna get a little wild. And then Alphabet Thursday after the close. So we do have some pretty big ones. If they're on this chart, guys, we're not going to chart them for the technicals. The fundamental story will change, but we just got to be aware. What's the ticker for bond yields? TLT is the 20-year plus, right? TLT is the what we call the long bond. So TLT bonds, if you don't know, like they're like a piece of paper. So you own the bond, but while you own that piece of paper, you also receive a yield on that bond. The paper itself has a value, and then the yield is kind of what you get for holding it. So there's two values, if you will. So if the yields are going higher, the bonds go lower. The bonds go higher, the yields are usually going lower. And so that's the relationship between the two. But with that, Amp, are you ready? I think he's ready to roll. So that's the basic stuff for the Catalyst Watch. What we can do here is just kind of like, the earnings calendar. Now we want to look at the Catalyst Watch. So if you're not following Lux, Algo, and a couple others, but Lux is our favorite. I'm going to drop their handle in the chat right now. But go ahead and follow Lux. These guys do every Sunday a little bit of a recap, not recap, but like a heads up of what to look forward to in the market. Sometimes, most of the time, you'll get stuff that we just went through, like the economic calendar, maybe some earnings highlights. But a lot of times you're going to miss some like corporate events, some other specific stuff. But that's why we go through this every Monday at the lunch hour to kind of take a look at that. But Em, go ahead, take us away, brother.
Yeah, so big shout out to Lux. They always they usually find one or two things. I know I say this every week, but they usually find one or two things that maybe weren't on my radar. But yeah, trade war is heating up. We've got Mag 7 reporters, Tesla and Google, as mentioned, and then always a great graphic. A great graphic there. Little chess. What is this 3D chess? Is that what this is supposed to be? I don't know. I like it.
3D,
Either
yeah,
way.
3D chess for sure.
Monday, we're pretty much past most of this stuff, so I won't spend a whole lot of time on Monday. But going forward, Tuesday, world economic outlook, not really a big thing on my radar. Two Fed speakers, Richmond Fed Manufacturing Index at 10. Lagarde, they just cut rates. There's a lot of things going on over there. Then the 2-year, we've talked about the 2-year and the 10-year being that curve is wild right now. So
yeah,
that's tomorrow.
You remember?
And then,
the craziest stuff. Do you remember when like the yield curve inversion? Oh, it's all bad, recession coming, and like we went straight up for the longest time after that. Now it shows.
I have to say this. Crash Kari is one of the worst ones. That's why I use the term Crash Kari instead of Cash Kari. But Lux has even put a little chili pepper next to Crash Kari now because how bearish and hawkish those comments usually come out.
Did what? Wow. Hilarious.
So we do have, look how many Fed speakers are tomorrow. 1, 2, 3, 4, 5 different Fed speakers all the way until 6 p.m. So a lot to watch out for there. And then, of course, earnings. I mean, we're fully into earnings season at this point, starting this week. Next week, it's even crazier. But this week, you mentioned GE, Lockheed Martin, Raytheon, Verizon. Tesla's the big one tomorrow. ENPH also reporting tomorrow after the bell. Going into Wednesday, we have more Fed speakers. Look at this. Every Fed speaker is getting their piece in, apparently, this week. Yep. You start off the day with 2 right before the market opens, right when the market opens. You mentioned this data on your previous slide, so watch out for that S&P manufacturing PMI and the services PMI. New home sales, maybe it's good. I don't know. I can't imagine with mortgage rates sitting where they are that it's really improving much, but we are seasonally getting a little bit better there. Beige book's always an interesting one. And then, of course, earnings. There are several earnings. I mean, ServiceNow is a big one. IBM, LRCX, Boeing, you mentioned. There's GEV the day after GE. So you have GE and then GEV on Wednesday. So just taking turns there, the umbrella company or whatever you want to call them now. Have they separated that out? Thursday, jobless claims. What does this look like? Who knows? All of this data right now, who knows what it's going to look like as things are rapidly changing. Yeah. And then as we go through Thursday, you'll see American Airlines. We've already seen a couple airlines report.
Dude, when is American Airlines going to get off their butt? These airlines are just...
They suck. No, they suck. It's the Paris trade of the century is short American and long United and Delta. Like that's the Paris trade of the century if you want to be, getting some action in the airlines to the upside. But Google is going to be a huge one, and I'm sure Paper will go into this a little bit deeper. But Google hits so many different boxes. Ad spend has been a
Yeah.
major question lately. So what do they say about that? Obviously, data center, AI, all of the above. You'll get a bunch of stuff out of Google here on Thursday after the close, and then Friday we have more Michigan data, like we do a lot on Friday. You see another chili pepper here. And the blackout period, so this is something to think about. May 7th is our next Fed meeting. So all those Fed speakers are getting in their stuff this week, and then they do go into blackout. So we don't hear from them after, was that, I guess, midnight, basically Friday. So Friday is the end of Fed speak until we hear from Powell on the 7th. And then
Wow.
only earning to think about the earnings on Friday. AbbVie is one that's pretty big, I think, before the open on Friday that some people will be looking at. So, and then look at Evan down here. Hopefully it's a green week. Rough start, Evan. I don't know. I don't know what to tell you.
You guys, rough start. Rough start.
Rough
I can't believe
start to
it's
the
almost
green
the
week.
end of April already. Jeez, I was just looking at the calendar. Holy crap.
It is crazy. Yeah, today is the 21st, and then so that's where we're at. Obviously, the earnings is going to be very interesting with Google. If anyone's curious, Tesla does report tomorrow. Those numbers are supposed to come out 4:07, and then that conference call will be at 5. If you're following along for that tomorrow afternoon.
Yeah, Tesla
But yeah,
expectations are. I mean, they're not good right now. So like, I don't know.
we know that.
It's so like the
What's
market
the
knows
surprise?
that Tesla expectations aren't going to be good. I just don't know how, like, if is it priced in already? So I mean, it's more going to be. I think it's going to be about like how does its commentary again, not necessarily numbers. And by the way, like if you're in Tesla, obviously, I say obviously, if you own Tesla, I don't think you own Tesla here for how many cars they're making, anyways, right? It's more about a much longer story. So, I mean,
We do
hopefully
have
we get a little
lower.
bit lower so I can buy some, but I don't know.
Well, we have lower expectations. I mean, here's the average. I mean, revenue at 22. It was previously 25. EPS 46. It was last at 73.
Yeah.
That's on Tesla. Google's also. We know they lowered their guidance. They're
What
looking
do you
for
do with their
89.
returning hub pulling it out?
Yeah, well, yeah, I love it. I use it all the time. But yeah, 89 expected on Google. That was 96 last quarter. This is actually reported, not estimate. So
You know what's
this
gonna be
is what they're
weird?
estimating on their sandbag.
With Google too, right? So like, are they going through with the the $1 billion Wiz acquisition? You remember that? Like we haven't heard about that at all.
Are they going through with anything? And here, we saw United Airlines kind of do this paper, and you know what? I really coming out and saying, well, if tariffs are this, then this is what we expect. If they're this, I mean, I'm waiting on some CEO to come out with like a replica board of what Trump showed, and just
Yeah.
say, if tariffs are 10%, we expect this CPS, and if they're 145%, we expect. Like somebody should just lay out every option, like just to troll. That would be. I would definitely invest in whatever company and CEO did that, because that would be absolutely hilarious. But
Big.
yeah, that's where I'm at as far as all this goes. Paper. I'll turn it back over to you to jump
Yeah,
into some charts. And
that's
they're not
really
good.
interesting. I was just thinking about Google too, like that Wiz acquisition, man. And we were looking at Google. Do you remember looking at Google from an investment perspective? Be like, okay, they're actually growing profits like faster than Amazon, believe it or not. And they'd gone from like making like 60 billion a year to like 150 billion. And all of a sudden they're gonna do, like, after that epic growth, which they never really got rewarded for from a stock price perspective either. It's crazy. Now they're gonna take basically half a year's worth of earnings and put it on Wiz. I don't know. That's going to be really interesting. See how the market responds to that. Man, I got to stay away, dude. I don't know. I want to be bullish. I really do, but I got to be realistic at the same time. It's like, it's not looking great here.
Because you're like, you get to the point where you're like reaching like a full extension reach for
Yeah.
bullish arguments at this point.
I mean, we'll have it someday, hopefully sooner than later, but You
That
never
doesn't mean
know.
you have to be like super bearish either.
Yeah,
You don't
I mean,
have to be super
it's a
bearish, but
hard market, right? Like, dude,
yeah.
to try so for the long term or any kind of like trader out there, e even if you get a trade, like if you're actively trading, and I'm talking like super active traders, to get a move that's sustained for more than like 24 hours right now, upside is like really rough, right? And even downside, like you can get it for a while. But the fact of the matter is that the market's going sideways here, right? And I can go back to that tweet I have pinned on my profiles. We're right in between that Friday non-farm payroll day back to April, the first Friday of April, that non-farm payroll day. We are smack dab in the middle between 502 and
And
520.
we're above where Trump told everyone to buy, and we haven't filled in the news gap yet.
We are above where Trump, and some saving grace here is like that liquidation Monday that came around. That's we were at 10% tariffs across the board, 35% China tariffs. Here we are now higher on the stock market with 250% retaliatory reciprocation tariffs. And I mean, so I still would venture to say most of the tariff news is probably gone or baked into, like, at that liquidation Monday. It's like everything's priced in, right? Like all the bad news, it was potentially priced in. So now it would have to be still in my mind something else that pushes us lower that may not be priced in. But yeah, this market's been crazy, right? Like one tweet can set it off, it looks great, and then it kind of goes away. But if you're having a hard time navigating these markets, there's one place that we can always go to at least give us a little comedic relief. And if you're not familiar with TA, the TA does technically stand for tarot. And every week, our good friend Miss Cleo stops by and gives us the tarot reading of the week. So without further ado, let's get into your favorite segment of the show. Here we go. All right, guys, if you're new to this segment, it's comedic relief, but it's wild how legit this happens to go down. So every week on Sunday nights, late night Sunday, we get a little tarot card reading from our friend Miss Cleo. The way this works is we get a top card. This is called a theme card. And for every day of the week, they get its own, every day of the week gets its own card. So this is the theme card for the week. That is a Queen of Cups. Yeah, I think this is kind of I don't know what this little baby is down here. I've never noticed this before. The thing with tarot cards is that sometimes they look good, but it's bad. Sometimes they look bad, but they mean good stuff. So you never really know. You're wading in some water. I think this is a chop card. And the full fail. See, this is what I'm talking. This is exactly what I'm talking about. So today's card. Oh no, that was tomorrow. So today's card is the Knight of Swords. I thought today's card was Strength.
Oh,
Today's card is the Knight of
you
Swords.
threw me off too. I was like, we didn't get strength today.
Whoa, that would have been a full fail for Miss Cleo right there. But she says the Knight of Swords. A lot of silver in this. Tomorrow's a lot of gold. This is Strength. This is what I'm talking about. I don't know if this is a good card or a bad card. We'll see. Then we have Wednesday is Justice. A lot of these, what do they call this? Arcana cards. There's not really any numbered cards. Knight of Swords, Strength, Justice, King of Wands. So wands are impulsive. I don't remember this card at all. And then we get like a 10 of Cups, which is like the Reading Rainbow. I don't know. This, again, it looks good. Little kids dancing. It looks happy. Maybe we're saved by the buybacks. Maybe something happens. We get a tweet.
Google buys back 2 billion or something.
So I'll just be honest. This looks like sideways. Maybe impulse upside or downside, and then the move begins. Or maybe the move ends because it is a 10. I don't know. But instead of me trying to guess here, let's go ahead and read it. So this is what we get every time we get these readings. She writes a little paragraph for each little card. This is what it means. So theme card is the Queen of Cups. We have the King of Cups for crypto. She does the crypto readings. I don't usually use it, but and the Queen of Cups for stocks. I anticipate a shared energy that keeps both markets in sync, which was weird. Did you see this weekend crypto? I almost saw Bitcoin at like 90K earlier. So Bitcoin showing
Yeah,
relative
it was
strength.
through the 200 day.
Yeah, Bitcoin showing relative strength today or this week, the last couple of days. I haven't looked at it yet. I don't know that holds. I do not put crypto in or Bitcoin in the actual gold category. I don't know if the markets change that or not, but so far it's holding up better, but it's not doing the gold thing. It's not doing the gold thing, so it's not bullish. It's just not epically bearish. The queen arrives when we're struggling and need a little bit of help. This implies weakness, and perhaps a bit of fatigue. I mean, I'm tired, dude. This is an exhausting weekend. Her blessings attempt to protect us, and as a result, there it is. Chop is more likely than trend. So if you know how to do these neutral strategies, these condors, man, I'm telling you, this is the time. This is the best time possibly. Like you could possibly put those on. Monday, the Knight of Swords. So that's today, right? So let's see how she's doing. The Knight of Swords brings a very strong energy that usually arrives or in the form of a green surge or gap up. Wrong. The downside is that his strength usually meets a wall and is sold off very often. I mean, I don't know if that was Sunday and that sold off immediately. We gapped down over the
Yeah, we
weekend
gapped down at futures open.
and just
Yeah, it's
continued to
been all
sell
down.
off. So, very often leading to a red day. Okay. So we're likely selling rallies. Did you see any rallies? I didn't see any rallies.
No, there was
No,
no.
there was no rallies
The
today. Okay.
opening 5-minute candle maybe.
Maybe opening 5-minute candle. We're likely selling rallies here for most of the day, but not getting in front of it until late morning or early afternoon. All right, so now she's saying buy the dip. All right, we'll see. Tuesday. Where's my Tuesday? Oh, Tuesday. Tuesday card is Clifford, right? Clifford the big red bear dog. Clifford, right? So that's strength. What does strength mean? Tuesday strength. Treat this card as a trend card and trade momentum for the day. Interesting. There's a high chance it moves in the opposite direction of Monday. She's calling for turnaround Tuesday already. High opposite of Monday's price action, which would not surprise given the theme card. All right. If the trend is negative, there might be a chance just before the close where we're able to buy the dip and get long for the close or following day. So where we are on SPY is if we gap down overnight and we open up at like 500s, yeah, I think if we gap down tomorrow, it's a buy the dip for a little bit and then sell the rip immediately. But which might be exactly this. Let's see what Wednesday says. I don't know what's going on here. Wednesday is justice. There's also a trend card. Oh, another trend card. That mean reverts from the previous day. So this is what I'm talking about. Chop, 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 chop. Right. So
So it's just trend back and forth.
What for one day? One day. Mean reverts from the previous day close. Again, that's not much of a surprise. This is the whole process of like bottoming out, though, right? Like that's good. Again, that's not much of a surprise. Look for an attempt to fill any empty liquidity zones, that's like gaps, left behind by moves on Monday or Tuesday, and trade with the trend, not against it. Okay. Back-to-back trendy days she's calling for in the opposite directions. So not a swing trader's market if you didn't figure that out yet. Thursday, King of Wands or the long-term investors market, man. I'm telling you, like long-term ports gets chopped up right now. It's like, oh, crazy. Thursday, King of Wands. There's a high chance of continuation here of Wednesday. Was it a lion? I'm sorry. I thought it was Clifford. High chance of continuation here and light to medium trend. It's more choppy. Wands bring impulsive price action. So we'll see large sweeping moves in both directions. That's the liquidity grabs, man. So that's a crazy day. This means, does anybody report Wednesday? Wednesday night is
No,
Google or Thursday morning?
no, it's Thursday night.
Thursday night. This
Wednesday,
means,
nothing.
yeah.
ServiceNow, IBM.
This means it'll be a great day for day traders profiting off intraday mean inversions, but a poor day. There it is. Poor day for swing traders. Yeah, it's a poor month for swing traders. I mean, unless you're short, even if you're short, it's not the easiest, to be honest. Friday is the 10 of Cups. So keyword for this card implies joyous celebration. Is that what we were calling for? Maybe the buybacks begin. Joyous celebration on Friday, an overpouring of positive emotions. I mean, we'll see. However, the 10 in the card often overpowers that, leading to a bit of a pivot point, which means sell your over exuberance. A choppy day is highly likely, and we're looking for topping or bottoming action to close the week. This also suggests that continuation is a probable outcome. Yeah. So continuation from whatever Friday looks like into the next week. So we shall see. Recap. It looks like a wild week with lots of trend moves and mean reversion. Yep. Big energy arrives during the beginning of the week and will weaken as we close on Friday. So maybe support holds. We shall see. But that's what we got for Miss Cleo. Yeah, appreciate you, Huddle. Hit the like button if you can. Subscribe. That's where we are. All right, so I'm gonna take a look at. Let's see. Let me pull up my charts. Amp, if you got a jet, let us know.
Yeah, I've got to run to a meeting. Miss
Appreciate
Cleo has no clue. I don't think any of us have any clue.
Miss Cleo has no clue, but I do. I have a clue, right? And I'll get into it here. So this is what we're looking at. Appreciate you. Is that on my post, by the way, if I go to my Twitter, still pinned, still true, right? This is from a long time, from beginning of April. I don't care. What is this? Get that out of there. I don't care what the headlines say. Price action rules. Here's what I know to be unequivocally true. If we're below Friday's low, we are going down. So what that means is if we're below here, 502.19, we're going down. We're not below the lows. If we're above Friday's highs, we are going up and there are no more shorts. We are not above Friday's highs. We were, and we are not now. We closed on them on Friday, but what needed to happen today is that this needed to hold and we needed to go up. If we had done that, then we could have seen 565 on SPY for that just basic implied move. And in between, which we were then and we are now, we're going to chop. And what that chop looks like this range, just like this. So in the meantime, what that means for the markets is that 502.19 is going to be the bottom end of this range that we're trading in today or this week. If we can stay sideways, I mean, imagine if we go sideways like this for quite a while. A lot of the other technical people are going to be like, this is what we call like a bear flag that has now been broken. So this is kind of like your flagpole pattern trader would be like, oh, we have now broken below that flag and we're cracking literally right now. But even this, just so you know, that target for a bear trade is down to 502 and then possibly retest things like this. And you, for a bullish continuation or bullish hold, you really want to stay something like this, which would be fine. And in the meantime, I think this could be the box that we hold in that's up to 563. So again, not like we're not into like all-time highs or anything like that. The distance between our simple moving averages is growing. It is getting bigger. So that's the possibility for some momentum to the downside is still very much there. And the upside moves because of this setup is going to make them a little bit choppier. So that's the Qs. That's SPY right there. 502.19. Qs are very much the same, right? So it's the same principles that kind of guide this here. So Friday's low for April is that it's 420, about just under 420, 419.70. So 420 would be downside on QQQ. Upside is going to be probably more like 460s in the meantime. But this would be the box that we're chopping in right now. And again, if we're not over 441, which would be Friday's highs, we're not going upside. And in the meantime, I think that we could go a little bit lower, like half the distance that we've traveled so far. And that should actually end up being the low for now, at least I think for the week. And maybe that sets up for like kind of what Miss Cleo is talking about, is that we go down, continue, then go sideways for a day and start to bounce and maybe get one big push that's up right into that. This is going to be now resistance, which would then be a chill stop. So ideally something like that for the week. That would in this kind of nearer term set up for a bit of a higher low, or at least a hold, like a bullish hold. But we're like right on it, man. We are literally sitting on it. It's be a tough call. If we're below 420 on Qs, it's not going to look good. If we're below 500 on SPY, it's really not going to look good. We're not there yet. So for me, I'm just waiting. I don't need to like catch a falling knife or pick the absolute lows. I'll buy stuff if we're holding above here, but we're not yet. So I'll happily buy things higher. And if you're looking at your individual stocks, like different stocks will bottom at different times. So 420 was yesterday too. Yeah, Easter lands on 420 this year. It's wild. Too much hassle. I will just, yeah. I think if you have the timeline for this, so Walter's like too much hassle to try and like trade around a lot of stuff. I agree, right? Especially like specifically for the long-term stuff. I'll just buy it. I would just say like I'm interested in buying at the depths, like at the depths of the lows when all hope seems to be lost. I'll go ahead and nibble, but I will nibble with the idea that like maybe we bounce a little bit, but I will continue to buy at the depths, which means that and small little bits, which means that like the depths can continue to get deeper, right? And I still have that phrase in my mind is like, when does the market hit rock bottom? I'm just going to tell you, it's true in life. It's true in stock market. You only hit rock bottom when you stop digging. And we haven't stopped digging yet. We got to see the government, Trump, whoever, put the shovel down, and then we can hit rock bottom. But for now, he's like, he'll pretend to put the shovel down, and you think that we're gonna stop digging, and then poof, he picks it up again. Yeah, iron condors. I don't know. They're not so. I don't even think they're slowly printing. Mine are quickly printing. So I'm very excited about this. This is the absolute best scenario for neutral options trades, to do a little bit of income generation. It's crucial to do it. I don't do it on single stocks because I don't like that single stock exposure when I'm doing neutral strategies. But the amount of income that you can generate at the index level here now is just you don't get to see these opportunities very often. Like clickbait. I showed up. I'm sorry, man. The bunny costume, I don't have it. We got to talk to the sorry. Yeah, I'm not actually in the bunny costume today. It's like COVID. Every month put in my, yeah. You know what? But if you did that during COVID, like you came out on top. So I think you do treat it. I think that was my point earlier. Treat it like COVID, because this is, make no mistake about it, this is COVID level uncertainty. At the end of the day, if you're buying the dips during the depths of COVID, you made it out just fine. It might have taken a while, but eventually you made it out just fine. It might not have felt fine while you were doing it, but at like over time, and I mean years time, you came out perfectly fine. And so I think you take that same approach here now in this market, because it is COVID level uncertainty, right? Most stock in my life. No, you only hit rock bottom when you stop digging, man. Just telling you, just how it works. The rock bottom keeps getting deeper if you keep digging. So anyways, so that's the Q. So SPY, SPY, QQQ, diamonds are, here's one to watch, right? So diamonds, DIA is diamonds. This is the industrials. And we have GE coming up first. The industrials are exactly at that level that we just talked about, right? So Friday lows. If there was one that's at the depths right now, this looks like DIA. Let me just see about GE. GE is not quite there. These are kind of interesting. So you look at your individual stocks. Again, different stocks bottom at different times. The diamonds as a sector. I'll look at Boeing. So Boeing, GE, pretty large components of DIA. CRM is actually a big component. Again, here's CRM lower. And Apple. I'm sure Apple's going to be lower. Apple not lower. 186s on Apple. But diamonds as a sector is at the lows. So like this one, you don't want to see going down anymore. I mean, maybe if it opens like a blip down and then pops back up, that's fine. But you don't want to see like full days trading below 380s on DIA. Like you don't want to see an entire day session trading in the depths down here. That's not going to be fun. Or multiple days trading below there. Not good at all. You know what I didn't do? I can do this for you guys too. I'm going to take a look at the internals really quick. So internals, I'll just do a new dashboard. So I'm going to put, so spot, this is SPX. So SPX, this is inflows versus outflows right here. This is pretty weak, right? So I'm looking at this right now. This is intraday. I'm going to move these to 5-day, 5-minute instead of 1 minute. You guys aren't looking at 1 minute. So this is SPY right here. We are below last week's lows, definitively. We opened up below last week's lows, and we started to kind of bleed out. This is advanced decliners accelerating to the downside. You're at negative 2,000. Negative 25 is literally as low as it goes. The interesting one here is the net flows. So vol D is volume up minus volume down. And what that is basically showing us do we have any buying, right? So we saw some buying coming at the close on Friday. We saw a little bit here. This is Monday, right? But notice here on the inflows Monday, Tuesday immediately weaker, Friday, Monday, Tuesday flat, Wednesday we have net outflows, and Thursday, which was our Friday, we have inflows, but it's not over that Monday. So net it's like a neutral week. Today we open up down, and this is just, we're bleeding out literally all day. If I compare it to SPY, the chart actually looking pretty similar. Tick is kind of like you're measuring during the day, but collectively what we're looking for on the tick chart, this guy, is if we're seeing overall positive or negative momentum. And from the start of the day, we open up negative 1200 tick almost. And all day long, we've been hovering below this green line, which is the 0 line. So we've rarely had any positive movements at all during the market. The vast majority of the day has been trending downside towards like 1,000 tick, which is really wild. I'm going to put this net flows here, Valdi for SPY. So that's SPY. And then there is a component for Qs. So I'm going to do one here, QQQ. I'll put this right here. And then for net flows for NASDAQ is actually, there's Vol QD. So we can see the same exact chart. So here's NASDAQ opening below Friday's lows. Again, we see the same kind of price action. And just like we saw over here with SPY, we're just not seeing the love, right? So like pulling down, volume fading away. This was a little bit more aggressive to the downside on Wednesday, a little bit more than SPY. And even right now, yeah, it was holding up a little bit better, maybe with earnings season coming, but we are, as we speak, accelerating. You can see this to the downside near term, right? So this is what gives me a little bit of pause to buy the dip. I got to see. I don't feel like we're at peak fear yet. Something is maybe brewing, but I think this can continue on for a little bit, and I don't need to jump in front of this train at the moment. So that's my take on this. I'm in puts. Oh, yeah. Yeah. It's just, this is not, look at, so I got NASDAQ flows and SPY. It's not bullish right now. It's just not bullish at all. So you gotta wait. It could get worse. You never know. And there's diamonds going. Oh God. I hope we don't break these lows. I hope we don't break these lows at all. I'm gonna do no buying this week. I think you could just chill, right? Just chill. Magic Beans, what's up? Dude, by the way, Magic Beans, have you seen these Mexican? I think is it Mexico? They're buying these gold beans. I, I think it was Chris talking about that the other day, talking about buying gold beans. Like that's crazy. Crazy. I mean, it's good. All right, so Christian's got the first. So go ahead and drop a couple tickers, guys. I'll give you like a 5-minute cap on that. I'm gonna go through a couple right now. So here's Bitcoin first. This could have looked bullish out of the gate. I'm not buying this here. I think what's important to realize is that look, we are still very much right into resistance. We're just hitting our head on it 1, 2, 3 times now. I don't know if it's going to crack, but right now this red line, that's the 200-day simple moving average. I don't know that that's a big dip that I want to buy. In the meantime, there actually is a pretty heavy, what we call fair value gap that happened over the weekend. That's right in here, actually right back to 85s. So I'd actually be more interested in seeing how Bitcoin reacts on a pullback here. I think you get there. If it accelerates below this, that's going to be wild. That's very possible. So that's why I'm not bullish Bitcoin here at all. You gotta either wait till it's well over 91s, maybe 90s, and holding that for a little bit, because otherwise these kind of like quick impulses, like we've had them quite a bit, right? So 1, 2, 3 more recently, and none of them are actually getting through that 90K level. So that's not really bullish to me. And that was a big breakdown area. So the big breakdown area is 91.5. This becomes your overhead supply. So yeah, it could pop up even a little bit more, but it's still not bullish. If anything, this is setting up for a rug pull. Yeah, I just said it. Yeah, this is more likely setting up for a rug pull in my mind, but I'll happily be wrong if I am. But right now, I don't see a reason to really get long that. I am long silver, so this one hasn't done the gold move yet. Is possibly setting up. I think silver, you got to buy a lot more time than you're thinking if you're going to trade options on this, and be pretty patient with this guy. But this one, on the quicker sell-off earlier, gold had a bit of a pullback here. So did silver. This is actually a pretty large pullback that silver had. So I'm long silver right now. This is 13% drawdown. We're actually up quite a bit from these lows. It's like 12%, almost recovering that whole thing. So if silver can get back over basically where it came from, I think this kind of trajectory is still in play. Possibly, let me see a monthly chart. Yeah, possibly breaking through. And here's a big pivot on silver. You do like bullion, whatever, but we're well over this $27 level on SLV. I think that's a pretty key level to hold. That's exactly where we bounced off of. And we're looking to get a little bit of a squeeze to the upside on SLV. So long silver here, it is what it is. This looks like squeeze is setting up until it's not. So hopefully it stays that way. Couple other tickers I'm in right now. I will go ahead and pull those up in just a minute. I'm going to skip over the dollar and TLT for at the moment. I think I can do, I'll do something on Technical Tuesday with our buddy Amit. Why is money flowing to Dollar Tree and Dollar General? This is a good question. So what I'll say is like, there's a lot of studies out there that like Dollar Tree, the dollar stores as a whole, actually tend to do really well in recessions. So money flowing into Dollar Tree and Dollar Gen, Dollar Gen is DG. So these stocks, number one, have been beaten to a pulp, right? Like beaten to a pulp. They're more or less de-risked, I think, from that perspective. But it's going to be on the headlines that when we're in a recession, are people downgrading what they buy, right? And that a normal one would be like, yeah. And so they go to the dollar stores and you get these massive outperformance runs. The caveat here now is that we're talking about a trade war, not necessarily recessions yet. Recession is still TBD. I'm not in a recession. I don't know if you guys are having a recession or not, but I think calling this a recession is a little preemptive or like premature maybe. And in that case, here's the inventory that makes up these companies like Dollar Tree here. They're not really breaking out, number one. But the stuff that they sell is going to be heavily tariffed. And I mean heavily tariffed. So maybe they can make up for it if we do have to downgrade and we still buy a lot of those tariffs. But the worst part here is that if we don't go into like a recession, and let's say Dollar Tree and Dollar Gen, you could even put Target or whoever into that realm, bulk up inventories ahead of, in anticipation of some like crazy tariffs, and they don't sell through the inventory, they're going to be in a bad spot. So I'm a little cautious on these kind of trades, as looking at them as investments. I would say from a trading perspective, that's the story, that's the thesis, and why they're going up at the moment. But I still have a hard time wrapping my head around it when most of their inventory is going to be tariffed. But yeah, it could be the new hedge now. But that's the story around those. Sometimes, I'll tell you this too. Sometimes it's just easier to take the simple trade, which is just, I'll say it, going short some equities. And sometimes it just works out a little bit better. So here's one that I'm in right now that hasn't gone. I'm actually, I don't have any longs right now. I'm short CrowdStrike here today, kind of breaking down below the 20-day. I'm just going to put these simple moving averages on chart right here. Below the 50 here today, losing the 20-day. I'm looking for the 200. That's just in around like 350s. Really kind of looking for maybe it holds up here and you get a little, I don't know what's going to happen there. But the reasoning for me is like, you're right back to the scene of the crime. This right here was the Y2K type disaster where they shut down Delta Airline. Delta actually pulled back, bounced back in, and happened a couple times. Got back right into that scene of the crime. This is literally right there. This was Thursday. I actually took this short initially, and I went ahead and reloaded it today as CrowdStrike was failing the 200. So this could be a big move. There's a lot of fair value here, just as trading. And if you like it long term, I'm looking targets here downside is closer to 320s ahead of earnings. So I think you can wait on this one if you want to buy it. It's a good company, but I think the stock is heading to the downside at the moment. Another one, this is getting wild. So Meta is getting very wild, below all significant simple moving averages. This chart is not looking good anymore. The crazy part about this, and we've been looking at this for a long time, I'm not a pattern person, but I do know all of them from a technical perspective. And what we're getting here is we have had a broadening formation for quite a while, actually. So like here's your broadening formation to the upside. Did we get it? Got a lot of it right here. But if I took that same moment and put it to the downside, this can get really wild. So broadening formation, it kind of, this is what we call price discovery, where the price actually just kind of traces up around that until you lose it too far, right? And so it's gone too far here. And what we do is we kind of like before the breakout, we take the center line here and find out where's most of the volume, and it's sitting on it right now. So literally the middle of this is about 470. It's coming into it today again with a lot of these headwinds on, antitrust monopoly type scenario. What I'm going to do right now might be a little, I hate to do this, but if we lose this, right, the next area that we do go to, and this could be setting up a trade or like, where am I actually looking to be a buyer again, is more along the lines sub 400. So I like Meta a lot as a company, but this is my shopping list item. Where am I going to get a little bit more interested? I'm looking at this. There it is. So volume shelf here. Pull this across right in here. I guess you could take it up to this guy, but it's still 380. And we have a bit of a, I would call this a pretty epic imbalance. Take some of these lines off. So the shopping list items, I think it might sound wild to say this here now, but it's what the charts say. This is a very heavy imbalance right here this is a volume profile. So if we lose this 460, which is that point of control from those recent lows, if we lose this level, there's a big trade brewing. And if you're looking to buy Meta, I'd say, like, if you lose this, you can get ready, because it's going to look like closer to 300 than anything else. But this is a huge move in the process brewing. Again, you got to stay close to those antitrust meetings. But last time Meta was in that kind of a situation, it did do this. I'd hate to see it, but again, shopping list item. It happens. It is what it is. But that's what I'm looking for on Meta. We are going to the gulag, boys and girls, as we speak. Another one I'll do quick. Palantir holding that 90, but not able to get over. I don't know how long 90 holds, guys. This is an important stock for the momentum trades. Again, trying to get over that 50-day simple, not doing the business here, not doing the deed, hitting its head right on this boom, boom, overhead supply. If it goes again, the third fail is usually a big fail, and we will start to see some kind of broadening formation here. So this is one I would say continue to be hedged, can do some kind of like costless collar, something like that. 20-day simple is still towards that 60 level, and you got to wait, right? Because this is setting up to be, is not going up, that's for sure. And we got earnings coming. Even if they blow out earnings, I just don't know that that's going to be good enough to do much. It's like, well, then Palantir, I think, does have to change that storyline, because it would, what got it here today may not keep it here in this current environment. So it's got to be a different storyline. Hoodie, very same thing. Not liking this, not looking good today. Full day, Thursday, full day trading below the 20-day simple moving average. Today, again, accelerating below. First level is 35. It is what it is. I love my hoodie. I think it's one of the greatest companies out there. But I'm not in a rush, and I would love to see it lower. And I will be drooling if I see this opportunity in the 20s. I'm like, this is what I'm saving my cash for, man. I'm just telling you, I'm saving my cash for some shenanigans to go down on the hoodie. It's not even Tesla, it's just hoodie. This is literally, I'm like, this one's going to be the one. Could be wrong. We'll see. But yeah, still favorite stock out there, still largest position, but hedged. So just careful. We're losing 40 right now. You can go lower. Be ready and be available for it. Can SPY retest? Yes. The answer is yes. It's unfortunate. That's like $10. Look at this candle is getting gross. Usually, so the way this works with these NFP levels, and if you're new to this, we move the length through when you lose through these zones from here to here to get from point A to point B. You might laugh. Some people laugh at me all the time when I say this stuff. It is 36 hours or less. It's 36 hours or less to traverse this $30 range. So can it hit 502 today? It can. It's like it's done it multiple times. Here's my point. Look, from here to here, boom to boom. This is like not even 36 hours. It's like 4 hours, right? I mean, this is minutes, obviously. And from here to here, it's a single trading session. So when I say 36 hours or less, I mean, here's your back test. It's done at 1, 2, almost 3, 3. Why not 4 times? It's typical. And when I say typical, here's another range. similar. 1, 2, 1, 2, 3. So here's your 36 hours, and then boom, one session. It's all the time. 1, 2, right? 3. That range, whatever that range happens to be, 36 hours or less. The level's 502. And we're coming in hot. Oh my goodness. I have these. Oh my goodness. Oh, yeah. That's not pretty. It's accelerating. Make it stop. Make it stop. But anyways, hopefully the VIX gets high enough I can throw some more condors on by the end of the day. They're getting a little spready right now. I'm not worried about it. All right, I'm gonna do Victor is hitting me hard here, man. What the 385. Is he talking about SPY? I don't know what he's talking about. It's probably meta. All right. So AMD, your next request. I guess we got to do NVIDIA too. We can take a look at it. AMD it's not doing well. This is a sick puppy dog again. I guess the question is like, where to? It's in this area. It's 72s. First stop, right? So we got a lot of movement here. So a lot of buyers showing up here. This is a daily chart. You have all of this in this area. You get interested. You don't buy it though, because you wait for it to show up. And this box is really wide. If we're at 72s on AMD, I'm assuming that the volatility index is more like 40s anyways. So we could easily overshoot when we're that high on IV. This is rough. I think you have to really breach that 80. Is it 80? 81. Yeah. It's got to be below 80 before you start thinking that it's going to be in the 70s. So we're not there yet. For right now, you have to be aware, like, this is that Friday level. It could hold. There could still be some interest there. But can you trade it from point A to point B in between now and then? Yeah, you can. But you got to be aware that you could get a quick bounce, right? Otherwise, you can look for something later that looks a little bit like this, simply. But again, it's not a bullish market. You're going to be really cautious. Not a bullish market. Netflix, I'm going to pull up. Netflix is interesting. A lot of stuff going out right now about, like, Netflix is Teflon stock in this environment, not vulnerable to tariffs. Look, there's no such thing in my mind. They say that about Apple all the time. Apple's not Teflon in this market, but what happens is, like, when all the dust is settled and everything's coming out of the, everything's done and over with, this is going to be flying pretty high and at risk at that moment anyways. I can't get behind that theory. Because if it's a bear market, if it turns really bearish, like, I don't care how good your stock is performing, the market's not going up, right? It's really hard. You say the same thing with Palantir, as much as I love it, or Hoodie, right? You get Hoodie's level of beta on Hood is just unbelievable, freaking unreal. But Netflix, yeah, it's you might be a good hideout for a little bit, but I would be very cautious about something like this. I'm just not loving it. Pretty weak on the day. Looked opening up pretty strong, not holding it together. We're gonna see what happens. Give it the 3-day rule, right? They just reported earnings. This is like the digestion mode after that report. Keep this on watch. But if this comes down, you don't want it to lose this kind of trajectory right here. That could be setting up for some. Wait, is it happening right now? Yeah, I don't know. That is not. It's not like it's holding that thesis. The price is not holding it together yet. It would have to bounce, like, by the end of the day or tomorrow, quickly. Otherwise, it's 920, and then it's 860, 70. All right. Let's see. Yeah, Bitcoin down doesn't help. No. What's up, Gojo? Yeah, I have limits in 20, 23, 24, 25, 26, 27. I'm all in there. Disney, Raymond. All right, interesting one. Haven't looked at the mouse in a while. Usually Disney in the 80s is good for a bounce to 120, which is like 50%, by the way. This bad boy is, God, I mean, this is digestion at its finest. This is going nowhere fast. I think earnings at the beginning of May. This is what I'm talking about. Usually in the 80s, it's just sub 80, 70s. This is where it bounced last time, 79s. You got there earlier, but it can spend some time in there. So you'd have to be really patient with this guy. But I think you could start nibbling here. If you see sub 80, I'd be interested. This could be a 3-month digestion also, easily. 3 months in this zone, probably not what you wanted to hear, but very, very easily something like this. And then back up to 120, and you got to cut it. You got to sell it unless inflation is through the roof. Then it'll probably go over 120. But I don't see this like this is the line in the sand. I'll throw this on a weekly. That's what I'm talking about. So it's just barely below 80. 1, 2, 3. Yikes, Aroni. I don't know. Bobby's not. He's gonna be leaving soon, isn't he? Iger. I usually don't like to see this many tests of a level 1, 2, 3, but they're pretty spun out. This is 2020. Last time we saw this, 2023. Oh, yeah. This is not a great chart, but I think if you get it lower, it's something I could buy and sit on and give to the kiddo. I don't think Disney's going anywhere anytime soon, but it might not go up either. So you gotta be super, super patient with this guy. Victor, we did Meta. AMD is 50, same NVIDIA. Yeah, well, so NVIDIA, we'll take a look. NVIDIA is 50s, guys. So there's 2 stops in NVIDIA. It's 75 and then 50. 75 is right in here. And you're coming in. You got this first test. So there's this little blip on that radar down here, but the low end of that liquidity, it's not even 75, is it? Trying to find it. It's not. So the issue with NVIDIA is that it spent about 2 months or 3 months here building this base. If we do get super bearish, I don't know. In a bear market, I don't know that this $80, $90 level really holds for NVIDIA. I just don't know. I won't know until it gets there. Until then, that's your support, just under 90 for NVIDIA. But if it doesn't, the real problem is that the legit support is down here in 50s, where it spent like the better part of a year creating that baseline. In between, this looks really choppy. In between, it is, you have like a little blip at 75, right? You have another one at 60s, 63, and a couple down here in the 50s down here. And you're just like, what I'm highlighting is like these little inefficiencies in the market that might want to get filled. And again, if we do get to these levels, what's the VIX going to be trading at? And when would we get to this? This would have to be like September type time frame to me. Unless, again, the new Black Swan event happens. But the chart is like really ugly. Like the chart is like one of the most ugly charts out there. And all of this, no lines from me, supports that $50 level. Anyways, that's about the 200-week simple moving average right here. I know that's 50%. People will be like, dude, I'm not fear mongering. This is what it is. It's just what the chart says. Rough. For now. I'd rather buy it a little bit higher. Chart says 50. Still. Netflix 1033. Astola. FTC sues Uber. I've seen there's so much stuff about Uber. It's been stuck in that $80 to $60 range. A lot of people taking Uber as like their large upside trade. I'm like, I don't understand. I don't understand. At least like a technician isn't going to understand. Well, I wouldn't think a technician would understand, but apparently CBW does think that. I don't get it. But it's going to be invalidated. Whatever upside trade you had today is invalidated today based on this news candle. You're hitting in this. Well, you'd have to hold. You'd have to hold literally right here in this area around the 200-day. But it's 66 would fill in that lower end market inefficiency. So shopping list. If you want to, I don't know the 66 holds. Again, I'm more in like 45s. God, they're going to hate me. They're going to hate me tomorrow on a Mitch channel, you guys. If I come out and say these numbers, it's just what it is. APH, Dark Gojo. I know this. This is Amphenol, right? This is like a very good company. If it is Amphenol, I'm pretty sure it's Amphenol. Yeah. So I know this company well. It's all your transceivers and cables, fiber, all that kind of stuff that goes. That's all your transport, your entire transport layer for data center data in general. This is like, watch this. I want to pull this, and this is what he's talking about. Bam! Look at this monthly chart. Oh my goodness, up and to the right. Did you know charts like this existed? I know, steep and uncorrected, but this is the picks and shovels of picks and shovels in the AI picks and shovel area. So very much commodity. Like it's commodity, but it's the most expensive commodity out there. You thought high bandwidth memory was expensive? No. This stuff is expensive, but super important nonetheless. But yeah, always a good company. This is yet to really break down. Good to watch, not going up. But if I get like a nasty downfall, I think this is one you could probably just buy like a little tiny bit whenever you want. VST. So this is very data center centric. Also, this is ew. You guys are giving me some nasty tickers. So it has to be here now for VST. So we call this price of interest. We get the last lows. And so the low before the low is literally here, 104. If it's not, then you have to get like really, you got to pull the microscope out. And you'll find this 90 level. Very heavy beta also. I don't see anything telling me to buy this bad boy yet. It's not like it's on your support level. And so if it loses this, the move from 104 to 92, this $10 like whatever right here, another $10. I know it's already down $10 a day. The next $10 is maybe faster. Caution there. Man, I want to be bullish, dude. I really do. I really want to be. But how can you anticipate a tweet? One thing is those internals, and the internals are not telling me it's time. They're just not. Oh, can I do yearly on Disney? Yeah. So I have a, where is it? 365-day candle. It's a 2 down on the year strat perspective, but it's your basically at targets. 83.55 is that yearly level. You want Disney over 83.55. Otherwise, we'd watch Bleach on Disney Plus. I haven't seen Bleach. Do I need to watch that? I can watch that. Ine wants hymns. Take a look at hymns. I'm going to start wrapping up here a little bit, guys. Hymns, I don't know. So healthcare is not doing good at all. Hymns, Yeah, I'm not expecting much here at all. This is like the do or die level looks like it's dying. Do or die level looks like it's dying. We're going to call this like a change. You know what? We're going to call this, what color do you want this? Yellow. Can we do, I'll stick with the yellow. DOD. For do or die. You guys tell me. It's not looking great. That next level down here would be in the 17s. If this area fails, it would be 17s. Dude, this is rough. It's like, I'm like giving out Armageddon numbers because like that's the only like if we get these crazy things, like, okay, I'll be interested. Do I want to trade for them right now? Like, I don't know. It's more like shopping list. You'd be like, dude, this guy's crazy. It is what it is. Did we miss Amazon? No. I'll do Amazon and then I'll start wrapping it up. Amazon has earnings coming up, but this is like the important level for Amazon. If it gets really crazy, it's sub 150. So like you're back into this box right here, essentially wiping out 5 years, because that's where Amazon was like 5 years ago. It's like the bottom of this box is 145s. So let me take this down and I'll show you 149s. And that's going to line up to about your 200-week simple moving average, which is this purple line right in here. But you're losing it in the moment. And again, it's just a lot of China exposure, a lot of tariff exposure. You have a big market inefficiency, like volume profile that's saying like chill, wait for a bit. This can come in a lot lower. I don't know, even when it gets there, I just don't know that it's 145. That it's going to be like, when it gets there, I got to watch. I got to wait and watch. Because the momentum coming into some of these levels is just like crazy. So here's where this level comes from. So this one, resistance, right? From support, call this support, and then support again. This is 145. This time it's going to line up just underneath the 200-week simple moving average, which is this purple line right here. Make it right. And yeah, they have earnings coming up, but I'm going to be looking for this prior resistance, which was here, was resistance. At one point in time, it was support. See that? I'm going to be looking for it to act as support one more time. Can it come in a little bit higher? Yeah, like 150s. That's fine. 60s. It's fine. But I think as close to 150 as you can. I am a little bit more interested in picking off some Amazon personally. It could go as low as 130, and I'll still be interested in picking it off. It'd have to be something crazy to hit 100. But if all hell breaks loose, it is this, and that is 100. I can't. This is like another Armageddon level. I see it on the chart, but like in good conscience, I can't really say like, oh, it's going to 100. Like, I don't have that in the cards just yet. Not if this area holds. If this area holds, it's not. So I don't necessarily want to wait for that. But could it happen? Charts say it's possible, but we won't know until we test this area over here. We won't know until then. ASML, Corey, no. Tesla. I mean, yeah, no, we gotta wait for Tesla's earnings. Iceman, what's up, Ava? Dev, I go live. I go live here on this channel every Monday at the lunch hour, 12 noon. I might do some sporadic ones other than that. And I also go live Tuesday after the close on Amit's channel. Amit is investing. And then I do spaces on Twitter all day, most days. Tonight we have a space 8 p.m. Eastern. So if you follow me on Twitter, we will do one. I think we got a bunch of big traders doing that. Frankie asked me to hop in, so I will join there for a bit and talk some shop, top some market chop. I mean, there's a lot of downside stuff, but yeah, you know, I give you an Armageddon list. Does it happen right now? I don't know, but like, it's not going. We're not going up. That's for sure. Too early to call all of that, and it's also a little bit too early to call like. It's also a little bit too early to call like Armageddon, right? So we're kind of in between. Best case scenario is honestly that we go sideways for a very long period of time and absorb a lot of this volatility. That's best case scenario. I mean, like months, like a quarter. I would love to see that, and maybe just kind of get through this tariff shenanigans. But yeah, we hit rock bottom when we stopped digging. We just got to stop digging already, man. Just stop it already. But anyways, guys, appreciate all of you. We will be back next week, and I will be on tonight, Twitter Spaces, and I will be on tomorrow with Amit. Unless we have earnings. That's the only time. Sometimes there's earnings stuff that gets in the way of that. But other than that, appreciate all you guys, and I will see you on the next one. Adios.